In this video, we're going to talk about session timing and characteristics. So sessions play quite a large part in intraday trading. In the swing trading side of things, they're not so important because you're taking high time frame trades. Sure, executing within a given session would give you a better entry or a faster move into profit, but for the most part, the high time frame trades are okay no matter when you execute them. When we're trading the low time frames, however, we are looking to take advantage of the volume or the action in the market of a specific day, or even a specific trading session. Some sessions have strong volume and other sessions have low volume. So it's important that we understand the sessions, we understand the different currency pairs that work well in those sessions, and we understand the different characteristics of each session. So there are three major session types. I think we spoke about these earlier in the course in the Forex Foundations section if you did watch that. Now, if you're not a beginner, you may not have watched that because it is obviously the beginner area. But regardless, we have three different major sessions. We have the Asia Pacific session, which on this image is marked out by this blue box. We have the London or European session, which is this green box. And then we have the US session or the New York session, which is this grayish red box. The Asia session is the time of day where the Asian market and the Australian and New Zealand market are actually, awake and trading. So this is actually evening. This is 1 a.m. for me that this really opens up, and it closes around the time I'm going to get up for the day at around 7 a.m. The London session begins around 8 a.m. and the major volume area closes at around midday. Now, London session does run till the end of the day, but this is when the volume really starts to close out. That is actually around the open of the New York session. And the New York session brings a new push of volume. And this is around the time that those in the US will be waking up and getting ready for the day to actually trade. So one of the big implications that we need to start with for sessions is the currency pairs you're trading. If you're trading major pairs like most people do, and like I personally would advise you to do, Euro USD, GBP USD, GBP JPY, USD CAD, USD JPY, all of these major pairs that include Euro, Pound, or Dollar crosses, then the best sessions for you to trade are the London and New York sessions. The Asia session is very flat and normally comes out as a consolidation range. So looking at the chart here, we can see the Asia session was a small consolidation. The London session brought a lot of volume. The New York session brought a lot of volume. Same again, we have the Asia consolidation area. Then we have a London push and a New York push. Asia consolidation, London push, New York push. Asia consolidation, London push, New York push. Asia consolidation, London push, New York push. Okay, so you can see that this is a very consistent thing, happens pretty much every single day. Some days it's not going to work out like this. Some days you will have large volume days on the Asian session. So such as this area, it's not the largest volume, but there is a nice push from this area all the way to this area through Asia. But as we've just seen, that is one example of many where the actual Asia session is very flat, like all the ones we just looked at, and even scaling back here, small Asia session, large pushes in London and New York, small Asia session, large push in London, large push in New York. So for the major pairs, the best time for you to trade is going to be through London and through New York. Now, if you're executing, you can normally get day trades within each of these sessions, normally taking anywhere between a few minutes to a few hours. And some of them could even be held out longer if you opt to turn them into a swing trade, which is obviously the beauty of what we've spoken about so far. With the high time frame and the low time frame trading, what we can do is sometimes execute a position as an intraday trade and swing it out if the market is telling us that we can swing it out. So for example, a movement like this on the New York, if we were to get an intraday entry to sell somewhere in here, we could have actually swinged that out all the way down a big large number towards these lows instead of potentially targeting here, as you may on an intraday trade. So because we're learning both, you're going to have a flexible trading style and you can actually use them both in conjunction to get some very big trades, starting in a session and then running potentially out of session. So now that we've covered the three major sessions, I was talking about currency pairs. Euro pairs, pound pairs, and dollar pairs are all really great for London and New York. Now, if you are situated in Australia or in Asia, where this is the prime trading time, trading pairs like Euro USD is not going to be the best for you. Now, it's possible that you may be up to trade London session on an evening because I think London session comes in, generally late night, but not too crazy if you are based in those countries. If you do want to do normal standard day trading, like you probably do, what you need to do is actually head over to some of the currency pairs native to that area. So if we look at AUD/JPY, for example, we will see that the Asia session provides a lot more volume than on the other ones. So we can see this area is a bit of a one-off. We have small consolidation, same as Euro USD or GBP USD, for example. But if we look at the Asia sessions on the majority of days, we have obviously a large push through the Asian session, small areas for the London and New York, showing there's not much volume there. We have here a decent push, just like a London session push in the Asia session. Here we have another large push and another large push and another large push there, and also another one here. So you can see that, yes, you are going to have those choppy sideways days, but we all get those regardless of which session you're trading and which currency pair you're trading. But for the most part, moving to a native currency like AUD, JPY, NZD is going to work out better for you if you are an Asian session trader, because that's where you're going to get the majority of your volume. Whereas if you're trading euro pairs or pound pairs or US dollar pairs primarily, you are probably going to have a tricky time actually trying to get a good movement in, because the market's going to chop sideways, back and forth, back and forth, back and forth, and not actually provide you with any decent positions. So that is just the first consideration that we need to talk through, is make sure, regardless of the time zone you're in, you are trading the right currency pairs for you. So now that we've covered the basics, it's time to talk about the session characteristics. Session characteristics are going to help us a lot when we are trading in the intraday perspective. And the session characteristics that I know are primarily London and New York trading focused. Now, fortunately, I know almost all of the students under the course are London and New York focused. If you are Asia session focused, you may need to do a little bit of dabbling around. But if you use this tool, and by the way, this tool is the FXN Asian session range. I believe we did speak about that when we were going through setting up your workspace. But for anyone who wants to know what it is, FXN Asian session range, just turn this on and then remove everything except these clouds, and you'll have a cloud that shows the Asia session, a cloud that shows the London session, and a cloud that shows the New York session. So, like I say, I'm going to teach you my personal approach, which is London and New York focused. I'm sure you can find the same kind of characteristics on those AUD pairs, JPY pairs, NZD pairs, and so on for yourself, if those are the time zones you're going to be trading. But if you are trading London and New York, these characteristics are going to be exceptionally useful for you. So looking at some of these, then we can see that the same kind of formations happen day after day. Now, the first thing to note is the Asia session is in a consolidation phase. And by the way, this is for major pairs: Euro USD, GBP USD, GBP JPY, GBP AUD, USD CAD, USD JPY, USD CHF. All of these major pairs are going to work in generally the same way. My top ones are Euro USD and GBP USD. Essentially, this is all you really need, but I know that some people have better experiences on different currency pairs and may favor those. But for the majority of major pairs, we see the same formations pretty much every single day, or at least most days, where we get three individual things. So the first thing is the Asian session consolidation. Throughout the Asia session, we normally just see these pairs ranging sideways. So if we look at multiple examples, we see here we have a very tight range. We have a tight range there. Here we have a nice consolidation. Here we have one. We essentially start and close the range around the same area. So the range started here, ended here. We can see in these examples, the range started here and then actually ended just down here, just below where we opened. Same thing here, we opened there, we closed there. We have this small box to work with. So the Asian session is usually a consolidation phase. Now, after the Asian session, we have a London push. So what we have is a large burst of volume that comes into the market and normally gives us a really nice drive. So you can see here on Euro, the London session comes out of the Asia session and then has a large push. So this is where a lot of volume comes in. And this is why London session and pre-London, which is this gap between Asia and New York, is actually my favorite time to trade, which in the UK is from 7 a.m. to about 9 a.m. That is the prime time for trading. Now, if you are working a job, this could also be beneficial for you because you can get up early in the morning and actually do a little bit of trading before you have to go out to work. If you can execute some trades between 7 and 8 a.m., for example, before you head out, assuming, standard 9 to 5 hours, you should be able to get a good trading career on track, even if you are busy for the rest of the day. Straight out at the end of Asia session, we get that nice push. That happens a lot of the day, so we can see here, consolidation, London push. Consolidation, London push. Consolidation, London push. And then, once again, consolidation, London push. This area, obviously a bit more volume in Asia, but back here we have consolidation, slow grind down, and then we have a sweep out and a London push. Once again there, just showing as many examples as possible because, it's a bit repetitive, but it's also very beneficial. Asian consolidation, London push, okay? Once again there, and so on and so on and so on. I could go back forever. So that is the two characteristics from the Asia and London. We have Asia consolidation and a London push. Are you getting fed up of hearing me say that yet? The third characteristic is the New York reversal. Now, this one doesn't come through every single day, but does come through quite often and will give you some good trading basis to stand on. Now, personally, full disclaimer, I am primarily a London and pre-London session trader. The intraday trading will work very nicely through New York, but in terms of session characteristics, I do not implement the New York reversal as much as you could probably utilize it. But this is where backtesting comes in. I'm going to give you the knowledge, and then you can go and work on that, backtest it, and become even better at it than obviously me in terms of the New York trading. So we can see from multiple examples, the Asia consolidation happens, then we have the breakout and a London push, and then after the London push, we have that small phase in the middle between the prime volume areas, and then when New York session opens, we get a New York reversal. So the London push goes to the upside, the New York reversal goes to the downside. Here we have a London push to the upside, and then we have a New York reversal to the downside. Once again, London push up, New York reverse down. Here we have a London push down from the start point and a New York reversal up. So we can see in many examples, the London push is then followed by a New York reversal. Once again here, London push, New York reversal. All right. So this happens quite a lot. And if you can learn to read that area where the charts are flipping from the bullish London or the bearish London to the bullish or bearish New York, that could give you a good area to actually get into some trades. So for this example, if you can eye that, okay, we are expecting a reversal to come in around the New York session open. Well, if we get some good reactions on New York open, like we see here, we had this little demand zone retest, we could look for a buy here on the very low time frames. And as you see, that would have been very profitable. So we essentially use what we know about price action, which we learned in the first chapter, and we'll be learning more so about on a low time frame basis soon, in line with what we know about sessions, which is that we often get a New York reversal. Same thing here. We got this New York push, but then we had here higher high, higher low, higher high, then a lower low, and then a lower high. So seeing this formation form, which would already be very nice, paired with the fact that we are entering into the New York session and are likely to see a New York reversal, is going to give you a lot more confidence to actually trade this down, which you may have not actually looked to do before. So the London push and the New York reversal are the major two components for intraday trading sessions, and the two things that we are going to find so very useful in our personal trading. Now, there is one other thing that I wanted to talk about, but this is going to be primarily covered in the next video, and that is the Asian liquidity run. So we get the Asian session, and after the Asian session, we normally have a liquidity run which pushes through the low or through the high of the Asian range, which is then followed by a quick shoot back on the price action in London. This in itself is actually a whole trading system, which I'm going to teach you. If you are going to be trading the pre-London and London Opens, this is literally all you need to make a successful career. I'm going to show you many backtesting approaches, and I'm going to show you the whole method to actually start it from start to finish. And you'll also see over in the community server, me taking these kinds of trades quite very often. So the way this works is the Asian session breaks out to the downside or to the upside, and then after a little bit of consolidation, the London volume pushes straight back through the range and sweeps out the high and sweeps out the low. I'll talk about why this happens and show you the full process in the next video, but real quick, let me show you a few examples. We have the Asia consolidation, a bearish breakout, and then pre-London and through London, we get a nice bullish push, which reverses the downside and pushes all the way back through the Asia range, back over the highs. We see again here, consolidation. At the end of the Asia session, we have a push down, so a liquidity run below, and then we have a large push up running the liquidity above. We even see here consolidation, have a small breakout, and then this wick here sweeps out the liquidity above and then makes a run for the liquidity below. So this happens very, very often. You'll see it again here. I actually took a trade on this one. That's one that I can remember for certain. I also took one here as well. We have Asia session consolidation, a break below, and then the London session volume picks up and we push back above the Asian session. You can see it again there. Didn't happen this day. It did happen this day though with a breakdown and a pushback through. It didn't happen this day either because we had that large push up. But we can see so many of these examples that I've just showed you shows that Asian liquidity run. So we're going to talk about that in more depth in the next video. Now, make sure you've taken notes from this session. Make sure you decide which session you're going to be trading and then work your currency pairs around that. And if you need to make changes to your currency pairs, is such as, maybe you're going to be trading the Asia session and you want them Asian focused or Pacific focused currencies, then go ahead and switch up to some of those: Australian dollar, New Zealand dollar, Japanese yen, and so on. And if you are going to be trading the London or New York, I do advise you just stick with the major pairs. They are going to obviously give you the best prices, the best spreads. They're the easiest currency pairs to get funded with, because when you're going through funding challenges, as much as I hate to say it, it is in a way rigged against you, and you are going to struggle with huge spreads and bad commissions when you are trying to trade the exotics. So the major pairs are always the best to go with if possible, but obviously if you are trading the Asia session, don't let it hinder you too much and do roll over to some of those AUD, NZD, and JPY pairs. One more quick note to add to the end of this video before we do move on. I'm sure this is going to be covered more later on, but I just want to give you the heads up right now. Another thing to consider with session timing is to make sure you are taking trades at good times. So as we've just spoken about, the different sessions bring different levels of volume. We obviously get nice volume in London, we get nice volume in New York, and on some of those exotic pairs, we do get nice volume in the Asian session as well. What you need to think about when you're taking trades is that you are taking trades at a good time. So you don't want to be taking trades when the New York session is ending, for example. Let's say you were looking for a buy from this demand zone. When we hit the end of the New York session, volume is going to start drying out and we are going to have very little action. So if you're buying here, there's going to be a lot of sweeps that come through and take you out. But even if you didn't get taken out, you're going to be waiting a very long time, and generally you're probably not going to hit your profit targets regardless, because the market is in a consolidation phase. So trade timing also matters, and making sure you time your trades along with the session volume is very important. This is why I advise to either start trading at the start of the London session or the start of the New York session, because this is where the volume is. And you can trade anytime throughout the day if you want to, but those are the prime times for trading. And when we hit the end of the New York session, or when the New York session starts closing up, for me, this is going to be around 5 p.m. UK time where the volume starts to dry out. That is then when I would stop trading. And if you do take trades, make sure you obviously manage them aggressively. It means you'll probably hit more break evens if you do that, but it's better than taking the losses that are inevitable if you're going to be day trading out of session. So just keep that in mind. If you're taking trades with tight stops, which we will be doing on the low time frames, you definitely don't want to be doing that when the session volume is low. So make sure you are trading in the best timing, which is going to be through London and through New York session.